All right. Hello, everyone, and thank you so much for joining in today's live session. I am Kavita Agrawal, and today we are discussing about volume analysis for proper trade analysis. What is the objective of analyzing volumes, and how does it help make better trade decisions, irrespective of whether you're a swing trader, whether you're a long-term investor? In either scenarios, volume can be very important parameter to check before and during your active trading. All right, so I'm going to share my screen quickly, and then we will first cover the different parameters. We will get into the details of why volume matters and how to analyze it. For everything, we will go back to the charts. We will look at practical examples in this live session, and at the end of the session we'll take 15 minutes to answer your queries about stocks and your positions. All right, now moving on. So I'll quickly first check that on all platforms we are able to see things the way we are supposed to. All right, everything looks good so far, so let's keep moving forward. Okay, if there is any issue during the session, for example, if you can't hear me properly or if you can't see the screen properly, give me a heads up by adding a comment in the comment section below. Okay, now let's learn how to use volume for proper trade analysis. First thing first, volume is just one of the parameters. There are many other parameters which we will be covering over the next 10 weeks. So volume, like I said, is the first parameter. We are examining volume to confirm breakouts, detect reversals, assess the market strengths, take insights into how other market participants are behaving, validate price move, basically sentiments. We'll discuss all of this in details in this session. In the coming sessions, we will also talk about price patterns, how chart patterns can indicate price reversals before they happen, and moving averages, basically how to study moving averages, which period of moving averages to use, how to visualize and understand them or use them for proper analysis. Then we'll talk about technical indicators, we'll talk about Fibonacci retracement, candlestick patterns, trend lines, volatility measures, and time frames. The idea is that in the next 10 weeks, I want to take you through all of these things systematically in order to help you become a better trader yourself. Now, let's jump right into the detailed analysis of volume and how to use it to become a better trader, to take better trades. So the first thing first, what is the purpose of volume analysis? Confirmation of price movements. What do I mean by this? Why confirmation? Now, the key word here is confirmation. When I say confirmation of price movements, what I mean is that it is not healthy to initiate a fresh position only and only on the basis of volume. You need to have other evidences which indicate that it is a good time to take your long or short position, whatever kind of trading you're doing in the stock market. So you have other reasons to believe that you should enter into a certain trade setup, and volume should act as a good confirmation for that. So just because there is high volume in a stock in either direction, it does not mean that you should go ahead and take position there. So understand first that volume is a confirmation tool. It is not a tool to be used as a primary decision maker. It is a secondary tool, a confirmation tool. Moving on. High volume validates the strength and authenticity of breakouts or trend reversals. Understand that breakouts and trend reversals can be either bullish breakouts or bearish breakouts. They can be bullish trend reversals or bearish trend reversals. But the volume, when it is high volume, it means it is supporting whatever direction of breakout or trend reversal has happened. So when do breakouts happen? Basically, this can be more of trend continuation when the price has moved and it has moved above a key level. When it has moved above a key level, that may be called a breakout. The breakout may happen beyond certain key support resistance levels, price patterns, chart patterns, and so on. Increased volume during breakout suggests higher probability of sustained price movement. So when we are studying a breakout and we see the breakout happen with strong volume, it increases the probability that this particular movement is going to continue. Traders seek high volume breakout for greater confidence in trade setups. So let's go to the charts and let's look at some examples where high volume was seen and how it impacted a stock. Okay. All right, so here we can see, so I have chosen the stock of Indigo to give you some insights here. We can see this on the day of 3rd of May 2023, we saw very high volumes on the charts of Indigo. Let me just make this marker a little brighter. So you can see that I have already marked on the charts that the volume was quite high this day. Sorry, hold on. Here you can see the price was quite high, and you can see the volume also here is pretty high. And when did this happen? So this high volume and this price breakout is actually happening out of a bottom. As you can see, the price had been taking some correction here, fallen nearly 15%. This is the daily time frame of the chart Indigo. And right here out of this level, when the stock price started moving up and broke above this level, we saw that there was a trend line resistance also which got breached. So this was a breakout zone, and this very high volume confirmed this breakout above the resistance zone, which is coming from right here, above this resistance zone and above this trend line. Let me also make this thicker for you to see it easily. And then what happened? The price continued to move above. How much? The price has already moved nearly 25% in a matter of 70 days. So having volume, now you can do a deeper analysis of this by going down different time frames. For example, I have now come down to the 15-minute time frame, and as you can see here on the 15-minute time frame also, if we zoom in, we can see the same high volume is pretty evident here, and the volume, even though it dwindles going forward, the volume lends support to this breakout on the chart of Indigo. Going back to our presentation, volume also, like I said, helps us identify strong price breakouts. So volume analysis helps identify these opportunities. How? When breakouts happen accompanied by significant volume, and this significant volume will actually shine on the chart. Like when you are using the volume indicator or you have volume plotted on the chart, you will be able to see very clearly how this adds value. How, like, you will clearly see the volume has spiked, and if this has happened with the breakout, it adds strength to that particular breakout. High volume breakouts distinguish genuine breakouts from false signals. So you must have heard terms like bear trap, bull trap, false breakouts. So all of these things can be identified in advance by using volume as an indicator in your analysis. Focusing on high volume breakouts improves potential and profitable trades. Now, firstly, see, the first thing is to have a trade setup, to have a trading mentality. See, you have decided that you want to be a trade setup. You want to be a breakout trader. So what you will do is you will be on the lookout for breakout opportunities in the market. And when you find one, you are going to look for reasons to confirm that trade setup so that the capital you are allocating to the particular setup does not experience any loss. You will make sure your risk reward ratio is more than 3. You will make sure the volume justifies participation. You will go forward with all your controls in place, take part in that capital. And even after that, if the market risk does not kick in, you might make money. But if market risk kicks in, even after you did everything right, you may incur a loss, because this is the stock market, right? That is the reason at the onset itself, we want to ensure as many things as we possibly can. So Sushant is asking a very good question, that sometimes high volume also denotes fear of missing out kind of buying or selling. How to identify it? So usually, Sushant, high volumes happen when institutions are participating. See, when I talk about volume, I'll also explain this, and this will also come in our presentation in a bit. You always should ensure that there is enough volumes in whatever stock you're participating, because when stock has sufficient volume, it is harder to manipulate. And this FOMO buying that you're talking about, this fear of missing out, usually happens in retail traders, not in institutional traders. Institutional traders are very methodical, very strategic, and they don't give in to fears or greed. Okay, so when you see very high volumes, it's usually not, it is not being produced by retail traders who are susceptible to emotions like fear and greed in the market. I hope that answers your question. Just let me know if it does. All right, so we've talked about breakout. Now let's talk about determining market sentiment. So this is also partly what Shishant was talking about. So when I talk about market sentiments, I am not talking about our sentiments like happy, sad, or fear or greed. We are talking about what the general sense people have or institutions have. So in the market, there are many different kind of participants. There is you and I. We come under the category of retail traders. Then there are HNIs, who are high net worth individuals who are trading. Basically, they are also individual traders, but their trading ticket sizes are so big that they make a huge difference. Then there are scalpers who are, churning huge amount of turnover every single day, every single hour to make scraps, to make very tiny profits. Right? Again, they are also part of institutional traders, because usually individual scalpers are very less. They usually operate on a proprietary, trading desk, so on and so forth. And then there are institutional traders as well, who are basically, your mutual funds or your hedge funds and other different big institutions, your provident fund, all those fund traders who are trading not in few thousands or lakhs, but in thousands of crores. Okay, so these the volume analysis provides insights into market sentiment. Now, all these participants together, what kind of sentiment do they have for the movement of the market or a particular stock can be gauged using volumes. Higher volume during an uptrend confirms bullish sentiments and upward momentum. Now, understand what I mean by high volume during an uptrend. I am talking about the broad market trend here. And when I say high volume, I'm not talking about the high volume in one stock or one index. I'm talking about the participation volume in the entire market. So for instance, every single day you're looking, now retail traders don't look at this, institutional traders and professional traders do. Every day we're looking at what has been the total churn of the market. And we can see that there's an increase in this overall market volume. And that, when it happens with an uptrend in place, it lends support. What happens when this high volume starts declining and the price continue to rise? It indicates that the price is losing steam, that the sentiment might be changing. People are not participating anymore. Think of it like a concert. So when the concert is about to begin and expected to continue to go on, you see a lot of people coming in regularly. But now you're seeing lesser and lesser people coming in. Sure, people might be staying there, but are more people coming in or more people going out? So when the concert is pretty much it has stopped, it's not no more beginning, the influx of people has stopped. Soon the influx of there'll be outflux of people as the concert comes to an end. So an uptrend is basically like a concert, which is, when it is starting, you want more influx. When it is in motion, fine, it is maintained. But when it is coming to an end, there will be an outflux. The thing about volume is that whether it's an influx or an outflux, you will not know. So you will experience high volume at the time of the beginning of the trend as well as at the end of the trend. Why? Because at the end of the trend, there is a reversal happening. Right? There is a bearish trend coming into factor. It is also called accumulation and distribution. If it is at the beginning of a bull trend, it is accumulation. If it is at the end of the bull trend, it's called distribution. It's also said that at the beginning, it is the institutional trader that is getting in and the retail trader that is getting out, because they have now become tired of holding the stock for too long and experiencing that loss, and they want to give up. So they start selling. That is when institutional traders start to buy. And then when the trend has gone up, the uptrend is about to come to an end, Now the retail trader starts experiencing what Sushant just said. They start experiencing FOMO. Now they think that I should go into the market, I should start buying. And this is when the institutional trader says that, you know what, the run up has gone on for too long. There are certain factors which indicate that, you know, maybe the broad economy is not well, maybe inflation is too high, maybe the jobs data is not that great, maybe the particular company is experiencing, you know, maybe it's become overvalued. They say it's now time to get out. They start selling, and who is buying all those sold stock? Retail traders. And then what happens? The stock prices fall. So higher volume during an uptrend confirms the bullish trend and upward momentum. Okay, higher volume during a downtrend validates the bearish sentiment and downward pressure. Aligning trades with market sentiments increases the odds of successful trades. Okay, so how can you use volumes to spot trend reversals? Volume analysis serves as an early warning for potential trend reversals. Like I said, you participated in an uptrend early on, say you were lucky and you did that, and then you see the volume has stopped increasing or the volume started to decline, which means lesser and lesser people are coming in. There are a lot of late entrants also, but even the late entrants have stopped coming in now. So you also should stop buying. What should you do now? You should be prepared to sell. Now remember one thing also, that while I'm talking about change in volume and everything, the volume analysis exists on different time frames. So you have to first determine what time frame are you interested in participating in. Are you looking to participate on intraday trading because then the volume profile changes, volume analysis changes, or do you want to do swing trading like me? In that case also your volume analysis will change. You will have to determine whether you're out to study the volume profile on the 15-minute time frame, 75-minute time frame, daily, weekly, monthly, or are you doing intraday trading? So you will be looking at volumes on the 3-minute time frame. Personally, I recommend against intraday trading because there is less analysis, more gambling there. For consistent success to make generational wealth, I suggest going with more swing trading and long-term analysis. Long-term investing, if you have enough capital to do it, you know, opting for long-term investing, if you just have 2-3 lakh rupees, unless, you know, the market is offering you good opportunities and you have access to great recommendations, may not be a very good idea, because there you will be averaging maybe 15-16% if you are lucky on an annual basis. In swing trading, it becomes possible to churn your portfolio more regularly in order to enhance your learning curve also and grow your capital faster if you are conscious of capital management and risk management. Now for retail traders, usually it is very difficult to be on top of so many nuances of analysis, trading and execution. So in order to help you out, I have started this Telegram channel, which is absolutely free. So anybody who wishes to associate with me for better swing trading, you can do so by simply joining this Telegram channel. All you have to do is click this, find this link in your browser, or you can also go to Telegram and search for EXP-Invest in, and you will be redirected to my channel. I'm also sharing the link in the comment as soon as I can. Okay, so moving on with this. Like I was saying, trend reversals are very, very spottable when you're doing good volume analysis in conjunction with your other analysis. So the 10 parameters that I introduced you to at the beginning of the session, those are the 10 beginning things that you have to look at when you want to initiate a position or continue to be in a position. Now, how does volume help you assess liquidity and risk? See, like I said, if you want to trade properly in the market, firstly, ensure that you're trading in stocks which have sufficient liquidity and your risk is manageable in these stocks. When the stock is illiquid, risk automatically increases a lot. Why is that? Because you may be able to enter into a stock, but during highly volatile times, you may not be able to exit at a stock, or because of low liquidity, the stock may have a high spread. What is the spread? The spread is basically the difference between the bid and the ask, the buy and the sell price at any point of time. Now, if you're a trader, you already know that any point of time you can see two prices for any stock, right? The bid and the ask, or the buy and the sell. Now there is a difference between this price. That difference is the spread. This spread increases when volatility increases, which means that instantly in this moment, if you buy and immediately sell, you will incur a loss because of this spread. So the buying price is usually always higher and the selling price is slightly lower. So the market maker is who makes profit out of the spread. When volatility increases, this spread increases. And if you're buying in stocks, or if you're buying stocks where the volume is low, then the spread will be even higher for you. So it eats into your profit. So these things are called basic hygiene, which you have to maintain if you want to, trade in the market, and especially if you're a retail trader and new to the market. Alright, so stocks with higher trading volume offer better liquidity for smoother trade execution. Abnormal volume spikes indicate increased market volatility and potentially higher risk. I just showed you the chart of Indigo. Let's go back to it. In this chart of Indigo, as you can see that, so this is a high volume spike. Okay, let's go to the daily time frame. Here we can see again there is a high daily high volume spike on the 9th of September 22. And what happened after this big spike in volume came? You can see this big spike on 8th of September 22. The price after this big spike fell nearly 15% in a matter of just 2 months. Okay, and then if we see here, I'm going to increase this so you can see the volume better. Now when these spikes happen, it tends to distort the prices. When you see here, you can see the price has reversed in the sense that it is making higher highs and higher lows. And look at the volume profile. When the price is going up, the volume has also started to increase here. And then when the price consolidated, the volume was slightly lower. But when the price started to go up again, the volume again started picking up. So this is basically showing us that the uptrend is in motion and the volume is agreeing with that story, indicating that the uptrend is going to continue. Did the uptrend continue? We can see that it indeed did. The price went on to gain 13% in a matter of 27 days, took a dip and then went on to rally another 14% or 13% in a matter of 1.5 months before it started giving higher volumes on the decline, which was an indication that the uptrend is out of steam and the downtrend is in motion. Okay, now, so what indicators should you follow? Okay, so Satish ji is asking what may be the reasons for such volatility. So there can be many reasons. There can be any reason for volatility. Say the stock has come out with their earnings and the earning was not as good as it was being expected, or it was expected to be good but it came out to be bad, or the Fed has done some sudden rate hike, or some economic data has come out which is very adverse, some global incident has happened, some big natural calamity or some terrorist activity has happened, or a very important personality has passed away. There can be innumerous reasons why stock may experience, or the overall market may experience volatility. I actually did a session on stock market volatility. It was a 2-part analysis. If you want, if you're interested in that, you can head on to my YouTube channel and you can actually see those sessions. I've discussed many different factors in a lot of details. Okay, so Satish, I hope that was helpful for you. And Sushant has another question. He's asking, is there any template to know the accumulation and distribution phase? It still looks quite subjective to me. So Sushant, yes, it is a little subjective, as is most things in technical analysis, because the whole field is called a combination of art and science. So there is certain level of subjectivity involved. However, the phases of accumulation and distribution can be seen when you look at the volumes automatically. So it requires a little bit of habit to be able to spot. You need to train your eyes. You need to do sufficient analysis of charts to be able to actually pick up on these traits on the charts. And for retail traders, I recommend not getting into such high level of details, because it's not something that is sustainable for you. You will experience burnout even if you are very enthusiastic about it during bullish markets like we are experiencing right now. When the market turns bearish, It makes the game very difficult. So it's better to associate yourself with a research analyst who has expertise and experience in this field and take their help for stock picks and managing your active positions, rather than trying to go out and do everything. Like that adage that teach a man to fish, give a man fish for a day and feed him for a day and teach him fishing, that's nonsense, like at least in the context of the stock market. Because retail traders already, like as a retail trader, you already have your version of fishing which you are engaged in for like more than 8 hours a day. So it's very, if you want to start analyzing and trading in the market, you're basically saying give me 2 more jobs because one is not enough for me. Or if you try to do it, then you're neither justifying your full-time occupation nor you're properly trading and analyzing the market. You end up doing nothing properly. So it's better to do what big corporations do: outsource the difficult part to somebody who's better at it, who's doing it on an ongoing basis. You focus on what is in your power, that is the execution of trades. Making trades does not take a lot of time, but it does take skill, a skill which needs a lot of cultivation, which can only be done when you make it a lifestyle and stop treating as a habit. Okay, so Gautam ji is asking delivery percentage, how to interpret it if stock is taken delivery or delivery sold. So Gautam ji, it is not about the particular percentage of delivery, it is about the trend. Okay, whether on a daily basis it is increasing or decreasing at any point of time, even if the delivery stands at 50%, in a different context it can be good, it can also be bad. Okay, if the volume was earlier 75% or 60%, but now it is 50%, that is bad. But if it was 30%, then 40%, then 45%, then 50%, then it is good. So it is actually the trend of the delivery volume or the overall volume change that matters more than the percentage at any point of time. Okay, so there is another very good question by Manab who's asking any relation of being overbought, oversold with high volume. So Manab, again, overbought, oversold also needs context behind it. Is a stock or the index oversold, overbought? In what sense? Is it just touch 60 or is it sustaining itself above the level of 60 for a long time? How was the RSI or whatever indicator, that oscillator that you are considering is overbought, oversold, how was it behaving in the previous few days, in the last few days, compared to the trend of the price? It is all very relative. See, in the stock market, nothing is as it seems. There is no one interpretation of things. Everything needs to be interpreted in context to another things. Everything is interrelated. You talk about stocks, you talk about sectors, you talk about asset classes, different securities, you talk about commodities, currencies, international markets. Everything is interconnected. Everything affects everything here. And you have to have, you have to look at everything, understand everything, and then come to conclusion. So may it be delivery percentage, may it be an oscillator in oversold, overbought zone, everything needs to be looked in a very relative context. And that is the reason why most retail traders, like 95% of the people in the stock market, are losing money. Why? Because of this. It's very intense. Okay. Okay, now let's talk about these indicators. Oh, sorry, there is another question. So if the stock is above pivot level, then one should see support, resistance and do swing trade. Again, Gaurav, again, context is missing. Stock is above pivot level. It can be above the pivot level, but is the stock above key support resistance level? I personally don't prefer to use pivot levels to identify my stop support and resistance levels. I prefer to look at the charts and identify my support resistance levels from there, not on the basis of any formula. And then Gaurav is asking how to avoid traps. See, your question should not be how to avoid traps, because that's the whole objective of traps, to get you in. Your mindset should be more that if you get into a trap, how do you minimize your losses? The answer is by using stop losses. See, you never know when you're walking into a trap, because that is what the stock market is. At any point of time, there are lots of traps. Some are being laid out by market manipulators, some are being laid out by the very inherent structure of the stock market. The main objective is to make sure that at any point of time you are minimizing your losses to the maximum extent possible without stifling or suffocating your positions. Using stop losses and then trailing those stop losses is the only way to make sure you're consistently successful in the stock market. Okay. So Arunji is asking how to identify the spurt of volumes, any screener available. So the best way of identifying spurt in spurt in volumes is by looking at the charts. Now, like for Indigo, I showed you, let's reset this. So on this daily time frame, you can identify that there was this huge spike on the 8th of September. It's visually visible, right? And then we can also see some spikes. Like these aren't really spikes because there are multiple days when we've seen such volume jumps, but see here, if I scroll out, you can see some instances when there were huge spikes in the volume. So the best way to do it is actually by looking at charts. And if you're not somebody who studies charts, then I would suggest you associate with a technical analyst research, like SEBI registered research analyst like me. Okay. All right. And honestly, volume spikes. See, there are 5,000 listed stocks, of which around 200 to 300 top stocks are worthy of regularly swing trading because they have enough volumes, they have little market manipulation and so on and so forth. And within that also, any particular day a stock has high volume spike, we might not even know why that volume spike happened, because what we see in the news firstly is very, very delayed data. That data does not have a lot of credibility as timely information. You know, usually what has come on the TV screen is basically the last place, or you are probably the last person to know that news, even if it's relevant news. Okay, so this is the reason why during earnings we see that when company has posted good earnings, the stock price falls, because for people to whom it mattered, the big institutions to whom it mattered already knew the news or already had reason to believe that this is what the news would come, and they preempted the news, took positions. When the news actually came out, it was time for them to get out, versus retail traders who are now getting into this. So you have to understand that in the stock market, because it's a game of money making, the best of the minds are playing here. So when you're trading and trying to make money, you are competing with the best of the minds out there. And when you realize that, you will automatically start realizing your own helplessness or your own weaknesses. And once you identify that, you will automatically start thinking of the ways how you can improve your standing in the market. That is by associating with a research analyst who does this as a full-time practice. Okay. All right, so let's move on. So we were talking about the indicators, and after discussing this slide, this is pretty much the last slide, we will move on to answering your queries about the stock market, particular stock positions. Indicators. So there are few indicators which you can teach yourself to use if you think volume is an important volume should be an important part of your analysis. For me personally, a disclaimer, I don't use any indicator. I use volume as is. I prefer more to visually see how volume trend is changing, whether volume is increasing, whether volume is declining. I prefer to see that visually and then make my decision, because like I said, volume is not the primary decision making tool for me. It is a confirmation tool. So I did not find, so I have used these indicators that you're seeing on the screen. I have in the past, I have used MFI and OBF. I have not used and I have also used volume moving average. I have also used CMF, the Chaikin money flow. I'm not sure if I'm pronouncing that right. I have not used VWAP. I have heard a lot about it. I have also heard a lot about the volume profile, but I have not used that. But again, I after using all of those different indicators, sure, they added value, but it was not significant enough for me to give it space on my charts. Okay, so I reverted back to using volume as is and visually see with respect to price action how volume is changing, and then make my decisions on the basis of that. There are indicators like on balance volume, volume moving average, Icon money flow, accumulation distribution, or what is called the AD line. Now, depending on what instrument you are trading in, whether you are trading in options, whether you are trading in futures, whether you are trading in equity, whether you're doing long-term trading, whether you're doing short-term trading, or you're doing medium-term trading like me, your analysis, your tools, your choice of indicator for just volume will also change. So like I said, in the stock market, everything is relative. At every step, when you change one parameter, other parameters also need to be changed. So the best way, or the only way I believe to succeed in the stock market, or in the whole forest, the whole universe of stock market, is finding your strengths and then playing to your strengths. There is no point in trading in options, in futures and intraday and swing trading and long term, everything at once, and using 10 different indicators and strategies at once. It doesn't work like that. If you're doing long and short trading and different indicators, you're just overwhelming yourself. The more you specialize, the more limited you keep yourself, the better you will be able to perform, because the more you'll be able to focus and learn and add value to your own trading system. So these are the name of some of the indicators. If you're somebody who uses charts, but if you're somebody who does not know chart reading, then this is not a lot of value add. However, I added this just to put some value. So let's quickly now give a quick wrap up to what we have discussed. Firstly, traders use volume analysis to spot volume spikes and divergences. How does this help? Volume indicators or volume study assist in assessing the strength of the trends and potential reversals. Incorporating volume analysis enhances the understanding of market dynamics and supports well-informed trading decisions. So that was all I had on the topic of volume analysis. I hope what I have shared with you has added value to you, and you've learned something new. I think the audience today was phenomenal, because the quality of questions which were asked was very entertaining, and I was more than happy to answer them for you. Now, before we log off, because it's already been 45 minutes and usually our sessions are 45 minutes long, I will extend this session by 15 minutes and move on to answering your stock queries. Okay, let's begin. Here we have our first query is in Marksans Pharma by Mr. Abhay. Okay, Marksans Pharma. Okay, you are able to see my screen now, and I can see that Marksans Pharma has launched itself in a strong rally. Is it a good idea to participate in the stock now that it has already moved? Now, since we discussed volume, let's take a look at the volume first. On the daily time frame, we can see that the volume is doing pretty well. The volume is making, so there was a huge spike and the volume continues to rise. Now let's move one time frame lower to the 75-minute chart, and just give me an opportunity to, okay, I'm going to stay there itself. Okay. All right, so now you'll be able to see volume better. Okay, so basically what is happening on the 75-minute time frame is basically we are able to see the volume in a little bit more detail, and we can see the volume is still increasing, but not at the same rate that it was increasing before. So what did I just tell you? That it is not the percentage of delivery volumes, it is not the volume as it is of today, it is the trend of the volume which matters. So while the volume is still high, it is no longer increasing day to day, which can be an indication that the uptrend might be coming to an end. Even if the uptrend is not coming to an end, Is now a good time for you to participate? I would suggest no. The reason why I am saying no is that I am a strong believer of the fact that we should enter stocks before the rally, not after the rally. So even if you participate right now, the problem is that you have very little upside and more on the downside. You know, your risk reward ratio would not be attractive at this point of time. And as a result of that, I would not suggest making a fresh long position in Marksans Pharma. Okay, we have we have a question on Amara battery. So just one note to the attendees that we are only taking one stock at a time. Anybody sharing bundle stock ideas will not be entertained, or only the first stock will be entertained, because there are a lot of people in line waiting for response. So my objective is to try and help as many people as possible. So please only ask for one stock idea at a time. Okay, so this is the Amara battery, and as you can see today there's been a massive downside. So firstly, because of this massive downside, we also see a huge volume spike. There is an adage in the market: don't try to catch falling knives. Here, if you try to make a long position, it would be like catching a falling knife. Not a good idea. Also, on the 15-minute time frame, what I'm seeing is that the price or the RSI is sustaining below the level of 30, which is an indication that more correction is expected to come. The stock may give a small bounce back to retest this 200 EMA of the 75-minute time frame. This light blue line, or rather the partly transparent line, is actually the 200 EMA of the 75-minute time frame, which I have formulated in a way that it also shows up on the 15-minute time frame as a slightly transparent line, right? So here you can see that the 200 EMA is clearly visible. It may give a bounce back to take resistance there, but I expect it to continue falling. And where is my expected support in Amara battery? It is at 600. If you attended the session few days ago, I had actually warned someone else who asked about the stock because, you know, of this strong rally that could be seen here, if they could take a fresh position, and I had advised them against it. Why? Because while the price was still at this high level, when you look at the volume, you can see that this uprise in the volume had already stopped when the stock created this price high. And when the stock did that, it was an indication that the uptrend had lost its steam. Another evidence was the trendline resistance was present, which also indicated bearishness. And today we see the stock has given a very strong downward movement. And it is still not a good idea to go forward and participate. Wait for the stock to fall 6-7% more, maybe near closer to 600 rupees. That may be a good time to participate in the stock. For now, avoid. Let's take a look at Astral. We have Pallavi ji asking about Astral. Okay, so one look at the Astral chart and I can tell you that there is a very strong bull trend in motion here. Okay, and Astral is a very good stock for swing trading. Okay, one thing is there that you have to swing trade in this on a ongoing basis for a longer period of time, because the length of cycles in Astral is pretty long. Also, the stock gives regular dividends, and as we can see on the chart, the stock has undergone 3 levels of split. Now, right now, the stock has taken some correction, and for the near term, it is giving some positive indication. So if you want to make a long position here, actually, okay, so there was some positive indication here, but it may not be a good time to make long position anymore. If you would insist to make a long position here, I would suggest you maintain the stop loss of 1818, which would be around 1.5% of stop loss from here. And then on the upside, I think the stock may go as high as at least 2000 to retest the high. Okay, now moving on. Mm, okay, so Rajiv is asking about Union Bank. Okay, so Union Bank I see has already achieved the target which I had set out for it, and now may not be a good time to make a fresh position in this. I can see some negative divergences developing on the 75-minute chart, and the daily chart is also very overbought. The 15-minute chart is absolutely screaming for help and telling us very clearly that creating a fresh long position may not be in your best interest. I would suggest avoid. So this is my overall view for banks in general. Fresh positions right now, not a good idea. 2 days ago, it was looking attractive, and I did give my members long positions in stock ideas. In fact, there is one stock idea that I have recommended to members, and because it has been recommended to members, I can obviously not share it for free on this platform. If you are interested in finding the name of that stock, you are welcome to join my Telegram channel and find a link to purchase that stock idea in the channel itself. Okay, moving on. Let's see. Lots of bank inquiries, so I'm going to move past them. Tejaswini is asking about DBL and Wipro. So Tejaswini, I'm only going to answer about DBL for you because one person, one stock is our policy. All right. Okay, so DBL again is a highly cyclical stock, right? And from what I can see, it has given a very clear indicative bottom at the level of 166 and started to move up. Now the stock is taking another correction. Now, because this, like I said, it's a strongly cyclical stock, I believe this correction will take the stock lower to retest this very important exponential moving average, which is the 200 exponential moving average. So if you want to make a position, I would suggest you wait for the stock to retest the level of 220 to 225, and when it does, then only you make a long position, not immediately. Okay, moving on. Gaurav is asking about Yes Bank. Actually, I've already responded about bank, so I will take up your inquiry about Triveni Engineering. Okay, 15 minutes, 75 minute, and the daily time frame. Okay. Okay, so I see that the stock is taking consistent support at this 200 EMA, but it has also recently breached below this 200 EMA, and it actually seems to be going through a bit of a struggle. There was a strong uptrend in place up to here, and then from here we can see strong negative divergence and a kind of a range shift. So Triveni Engineering is personally to me not looking very well set for a bullish momentum right now. I would not recommend you to make a fresh position. If the stock does give a strong move above this resistance zone of 315, so basically if the stock gives a breakout above the level of 315 with strong volumes, I will definitely be open to considering a long position in the stock, but not right now, because you can see the volume has pretty much dried up, and in fact, if anything, the volume has been higher on the declines. You see the red lines are longer than the green ones, which indicate that the volume has been higher on declining days, which is a red flag. So long position not recommended in Triveni right now. Okay. Let's see which is the next stock that we are going to analyze. All right, so we have a query on all right, so Shant is asking, is high volume an indication of dumping of shares by smart money? Sushant, the thing is, when you see high volumes, how will you indicate whether it is, because at any point of time, volume is only registered when one is buying and one is selling. Okay, so when you see high volumes, it can either be retailers selling and smart money buying, or other way around. You have to combine that with trend analysis to see whether your thesis makes sense or not. Any information standalone has no value in the stock market. Everything needs to be seen in the context of other relevant pieces of information, irrespective of whether you're doing fundamental analysis or technical analysis. All right. Advanced enzymes. Let's see. It's been a while since I took a look at the stock idea. See, overall, so there was a point of time when the pharma stock had just reversed that. I was very bullish on the pharma stocks, but right now I think the pharma stocks have overall rallied somewhat, and they've rallied nearly 30-40% from the base depending on individual stocks. I don't think it is a very good time to start making positions in pharma stocks, because there are certain developments on the charts which are advising against it. So even for advanced enzymes, I won't say that it's looking bearish, but it's not looking bullish enough for me to go out on a limb and risk my money. Okay. On the contrary, there are other very compelling opportunities in other sectors and other stocks which offer a much better trade setup to participate in right now. So I would suggest you avoid advanced enzymes. All right, let's take another stock query here. Lots of queries today, amazing. So Gaurav, I've already answered one question for you, so I'm going to move on to Mr. Gautam's inquiry. He's asking about Rajesh Export. Good stock, good pickup. Rajesh Export is actually, it's a good company, and it's a wonderful stock for at this point of time for both swing trading and long-term investment. Because see, if you can see the chart, I'll just remove some of the drawings to make it a little bit of a little bit cleaner. So this is a daily time frame, right? So you can see the stock has very strong resistance near 850, and the stock is right now at 509. And what we have seen is that multiple times in the past the stock has come to this level and given a very strong reversal. Not just that, like Gautam ji said, the volume near this level has been phenomenal. Okay, so very high volume participation is being seen. Despite a very high volume, the price is not going up, but there is something that is happening in the price. And what is that something? On the days when the price is closing green, the momentum is such, the momentum is so strong that overall it has formed what we call a positive divergence. So from a long position perspective, I think Rajesh Expo is looking very attractive here. But the thing is that you have to be very careful, because and a more than a short-term position, I would recommend you to go for a long-term position in this stock. Because if you do a short-term position here, you will have to keep a smaller stop loss, because obviously for short-term positions, we prefer to keep smaller stop losses. Usually we don't want to keep a stop loss bigger than 3 to 5%. Here, however, you will have to go with a bigger stop loss because of the nature of the stock. So get into the stock for the first target of 30%, if at all, second target of 42%, and the third target of 60%. Okay, and even from a long-term perspective, make sure that you are maintaining the stop loss at the level of 467 and no lower. Okay, there is no reason to hold the stock for lower than 467. Now on the 75-minute time frame also, we can see there is a positive divergence here, and on the 15-minute time frame also we notice the positive divergence. Even on the daily time frame there is a positive divergence kind of formation underway. It has not been confirmed yet. Okay, so if you go forward with creating your positions in Rajesh Expo, firstly, don't expose more than 3% of your capital to the stock. Second, if you do make position, allocate your capital slowly and over time. If you are risk averse, then wait for the stock to go above and confirm above the level of 545 before you buy the stock. But if you can afford to take risk, then start accumulating maximum 3% of your capital over time. Okay, so that was Rajesh Expo for you. We will move on to CG Power for Sushant. Okay, extremely strong bull trend is in motion here. That's what the daily time frame is saying. 75-minute time frame is saying that, you know, from the last dip the stock is already run up 16%, and the 15-minute time frame is also saying that. So because the stock is already way above all the moving averages that we follow, it is already formed a negative divergence and given an extended rally, I would not suggest you take a fresh position here, because you would be subjecting your capital to a lot of risk. Participate or buy stocks always before the rally, not after the rally. Okay, we have a question on Sonarcom. Oops. Sonarcoms. Okay. So this is Sonarcoms, and from what I can see, the stock gave a really good reversal from the level of 400 and it has gone up 30%. But does it feel like moving up further? The volume activity is not so good. There is a negative divergence on the charts. Even though the price has been trying to move above from the base of 508, it is not doing very well. So I personally don't feel like Sonarcoms at this point of time is a very good position to take a long is a very good stock to take a long position. And I will reiterate what I said, there are much better opportunities available in the stock market right now. All right. So with that, we have come to an end of the session. I am aware that there are a lot of you whose stock queries I have not been able to respond to, and I sincerely apologize. But we have to pay attention to the time constraint here. What I would recommend for you, if your stock queries have gone unanswered, is that you join the Telegram channel and you connect with me one-on-one in order to have your queries solved. Also, the market is near a lifetime high, and today if I look at the prices, what I see is that the price of Nifty opened significantly higher, but it spent the day pretty much weaving around the resistance zone which I have mentioned at around 19,760, right? So this resistance zone I've been talking about since like more than 2 weeks in my Telegram channel, and today this resistance has been reached and price was taking showing some weakness. There is also negative divergence on the 15-minute time frame, which suggests that if you have long positions in your portfolio, you need to make sure your trailing stop losses are on point. If you don't know how to set an appropriate trailing stop loss, I would suggest you take my help. You join my Telegram channel and you take my help through the channel to ascertain the right trailing stop losses for your positions. Okay, so with this I will take your leave. I am coming live again tomorrow at 5 p.m. to talk about technical analysis. Tomorrow's session, or every Wednesday, the session that we do is called Let's Get Technical, in which I bring to you 2 or 3 of my own past trade picks, and I basically do a full post-mortem of it. I discuss why I participated in the stock idea, and I go through the details of how I updated the stop losses, why I updated the stop losses during the journey, and then eventually how was the trade idea essentially exited at the end, how much profit did we make, and even if it's a loss making stock, what was a mistake that was committed which could have been avoided. And these lessons that we draw from the past trade analysis adds a lot of value and contributes one stock, one idea at a time to making us better traders in the future. Okay, with that I will take your leave. Thank you so much for giving me your time and attention. I will see you again tomorrow. Namaste.